Hello everybody, this is Daniel from Itagra. Welcome to the weekly forecast for the week 23rd of February. Here we are on our brand new website. You go on the material and weekly forecast and you find the short free version open to the public. Right, last week was very erratic market with a lot of false breaks, and the economic calendar was not really clear, not very powerful, let's say. This week looks a bit better. There are better fundamental reasons and also nicer weekly setups. As we said, we have major news coming for euro, especially from the inflation and the business climate in Germany. The dollar will see quite a lot of figures. The pound will have on Wednesday actually, important news for the gross domestic product. Not much more for the rest, and something for the Canadian gross domestic product (GDP) on Friday. What we see actually, very briefly, that euro is a bit exposed to risk because of the levels that has reached, because of these expectations on inflation, which has been a very sensitive topic at ECB. The pound is likely to stay a bit quiet and continue possibly the recent momentum. The same for the other commodity currencies. We see actually the dollar exposed to big moves, or let's say more directional, more clear moves after retracing. Actually, the dollar index across the other majors is showing rejection of lower prices. Basically, is picking up again after bottoming, after reaching a certain low level, which indicates that dollar is ready to recover. Weekly setups, we said there are a few very nice setups. The Aussie against the Canadian, pound, dollar, and Aussie dollar. Let's look at them before we go into the strategy, so we know what we are talking about, basically. So basically, if we look at the Aussie Canadian dollar, we see at the weekly there has been fairly big rejection with a pin bar of the weekly level, which is a very major one. It's a very big one, which is one, actually it's even a round figure, which has a lot of importance in trading. Round figures, psychological figures. Basically, we do see possible retracements around this area. The weekly trend is possibly up, but it has been doing a lot of, if you see, a lot of basically ranging moves. So we see the potential on the daily chart. There is also very strong pin bar. So very safe would be just to wait the break here, the node, or even lower, just to see how far it can go. It's a counter trend trade, so it's riskier, but it's a fairly strong one. I would say first target around here, certainly covering to break even at this level or even before. But this trader has potential, let's say, even more, let's say, it could go up to here. Anyway, we do like Aussie US dollar even a bit more, because it's more technical friendly. If you look at the fundamental reasons behind the tapering in US, you see that the dollar might pick up strength again. The Aussie, we know that the bank, the Australian bank, wants it lower to boost up economy. So fundamentally, is very sound. On a weekly chart we see a rejection of basically 091, I would say, more or less, which is fairly important level. And on the daily you see even a better rejection with a double top pattern and pin bar here. There has been this, let's say, conflicting signal, pin bar signal, but it has been smashed, which makes it a smash bar. Pin bar which is smashed at resistance or support becomes a smashed bar. It was before actually, but and then we have Aussie. They're all very similar. The Aussie, actually, the Aussie Swiss franc, it's also very good. This gives even a bit more confidence, because if you look at the weekly chart, last week there was already a fairly good setup. We didn't spot it, I must admit it, but it was a fairly good setup. It triggered, and it's, I would say, at an early stage. It's still in process. I think this has the potential to go the whole way down. So this is fairly good also option, which is, I think, even safer option than the other two, because it is already triggered actually. Pound dollar is a potential big mover. The pound is retracing and it has approached this resistance. If it breaks through, we see a much larger move up to here, most probably. The weekly chart is quite clear. Strong pullback from a very high historical level. If you look at that, we go back in 2010. Last time was 2011 and then 2009. I think it was never higher than this after the crisis. You see, last time that it was higher, it was in 2008, which shows a certain degree, let's say, of strength of this level, of this price. Right, I think that's all. We still have the gold. I mean, we still have gold running. We still have oil. We are on a lookout to buy oil. Sorry, we are on a lookout to buy oil around 100 level. Now on a weekly chart, you see it's quite bullish. There is no sign of serious retracement. Possibly the retracement is happening now. So anywhere between 100, I would say 100 and something, and 101.6, that shows a clear, let's say, rejection. We would be happy to buy again. It's still not the case now. The rejection here is quite a bit early stage. I will still wait for a bit. Right, I think that's enough. That's more or less what we covered here. Of course, our group will work all together in the platform, in the workspace, to generate and to review trades during the week. So stay tuned and use our website and all the resources for free. Bye bye, see you next time.